Good morning, afternoon, or evening, ladies and gentlemen, all in crypto here, and welcome back, guys, for another daily cryptocurrency market update. I'm wishing you all a wonderful day wherever you are and whatever it is you are doing. As always, we have a lot to get into, and if you are finding yourself on this channel for the first time today, don't forget to check out that subscribe button because we drop an update just like this one every single day at 1 p.m. UK time to help you guys stay up to date with the latest and greatest things happening within the cryptocurrency space, but also the broader markets, and that's exactly what we're going to be doing in this video. We know there's a macro headwind at the moment with bond yields spiking, with the dollar becoming a little bit more dominant, and this is a kind of macro headwind against the cryptocurrency space. The cryptocurrency space also made our target of 42k. It then shot up to a key level of resistance that we were expecting a pullback from that would ultimately set up a right shoulder for a broader continuation pattern. We're going to be looking at all that, the CME gap that we mentioned yesterday, and a number of other things. So we're going to be looking, of course, at what's going on with Grayscale towards the right at the end of the video. But I want to kind of start on a key event that took place yesterday, and that was Binance versus the SEC. A hearing took place, and we're going to be looking at an overview of that hearing before we dive into the charts. And before I go any further, it's important for me to say this. I don't think the degree of panic that is currently in the cryptocurrency market is at all warranted. I think people suffer from recency syndrome. They forget the nature of the beast that you are dealing with when it comes to altcoins. This is a volatile asset class to be investing in, and of course, high risk, high reward. And we are going to be looking technically at the fact that we still believe a broader uptrend is in place, and this is all part of the course. We were expecting a pullback for Bitcoin. We are having it, and Bitcoin, of course, is the tide that rises and sinks all ships. There's a saying out there that I think is a very true one, and it's very applicable to the realms of investing. If you can't handle the heat, get out the kitchen. It's quite simple. You know, this is, for me, another day in the cryptocurrency space. The good news is we were expecting a pullback, and we're getting one. Where it turns ugly is if we run that left shoulder and we start to look to put in patterns that may see us see further downside. Then this kind of idea of the inverse head and shoulders that we have gets kind of thrown out the window. But remember, our first target got met. When you hit a target, not just for Bitcoin against the dollar chart, but also Bitcoin against the SPY, gold, and the NASDAQ, all those targets got hit. You typically get a pullback, and there's resistance coming into play across the board. But I don't think that this pullback is going to be very long-lived, and a market just doesn't go up in a straight line. And this is all a pullback, in my opinion, until we see reason to suspect otherwise. So enough of me rambling on. We can cover all that when we dive into the technicals. Also look at the CME gap that's now been closed. Let's start the video off by taking a look at some opinions on what took place yesterday in regards to the SEC versus Binance. So the SEC versus Binance hearing update 1. Judge Berman Jackson has dispensed with the prepared arguments and gone straight to the questions. She started with the defense team. She seems skeptical that an investment contract actually requires a contract. She focused on the scheme language in the Howey test. She seemed impressed with the reasoning in the Ripple case. Paraphrasing, she said Ripple was a thorough and well thought out opinion. Like Judge Failure, Judge Jackson indicated she was not persuaded by the major questions doctrine. Of course, this was how they tried to dismiss the cases with this. Both the SEC or both Coinbase and Binance have tried to use this to sort of sway things. She also expressed skepticism about the due process argument around fair notice. There was a lot of back and forth about where the SEC's authorities end and the CFTC's authorities begin without a lot of resolution. There are a lot of issues in the Binance case that are not present in the Coinbase case. The court is now back in session for the SEC's grilling. And of course, this is the second update on the matter. The hearing is concluded. Some big takeaways. The judge seems skeptical of the idea that BUSD stablecoin was offered as an initial investment contract, which is interesting. The judge seemed receptive to the argument that Binance initially offered the BNB token as an investment contract. So very interesting. And I think because there's a crypto exchange behind BNB, and what is the future of BNB? What does that look like? That might be an interesting video. So the future seems, or the judge seems uncomfortable with the idea that the token, even if offered initially as an investment contract, continues to be a security when traded on the secondary market for all entities. The SEC lawyer claims the token embodies the investment contract, which seems at odds with the earlier statements that the token is nothing but lines of code. The judge was resistant to the idea of having mini trials over whether the 10 other cryptocurrencies listed in the complaint were sold as investment contracts when the issuers of the 10 tokens are not in the case. Of course, this is the interesting thing about these cases. They've listed loads of cryptocurrency asset securities, the SEC, but they've not actually charged the sort of projects or the companies or the bodies behind these tokens with the facilitation of unregistered securities. So it's very interesting. Very interestingly, also, the only third-party issued token mentioned was Filecoin. No specific mention of ADA or Solana or the others. The judge asked the SEC what the boundary is between tokens that are investment contracts and those that are not, because there are people buying and selling these assets on a daily basis, and they need to know, nearly verbatim. It is hard for me to distinguish between the SEC's articulation of how a token may be an investment contract and what is happening operationally with Ethereum every day. I am a little bit disappointed that the Binance lawyer never argued that crypto tokens cannot be investment contracts if they do not carry with them the rights to income, assets, or profits of the underlying enterprise. But I guess that's just me Monday morning quarterbacking. Take care, folks. There was another argument brought up in the Coinbase and Binance hearing. The SEC touted the benefits of the guidance it had given about the analyzed whether crypto tokens are securities, yet they omitted any mention of Bill Hinman's invention of a sufficiently decentralized test, as if it never happened. And this, of course, is Paul, who is the chief legal officer over at Coinbase. He says it's even worse than that. When asked point blank about Mr. Hinman, they acted as if the question wasn't in fact asked. Very interesting. So the thing is with crypto, it's still not even regulated, and there's good and bad with that, okay? So the bad news is you're going to get volatility as a result of it. The good news is you get to basically front run an industry. And with the approval of a Bitcoin spot ETF, it's not something that instantly happens. You've got to remember, a lot of the price would have been priced in. Okay, it's interesting how, if we go over to the charts now, we were expecting a pullback around about 47K. There was a small continuation pattern here that gave you a target around about 47K. And also this broader head and shoulders pattern that we had from 2023, or got completed in 2023, gave us a 42K target. Once you hit a target, you pull back. It's very obvious. And also, with this being such a key level of resistance that ultimately could set up broader continuation, you all should have, if you watch this channel, day in, day out, expected a pullback. There's no need to be surprised by this. And it's confirming and comforting when the market, when you think something's going to happen and it does. Okay, so we're still waiting for this right shoulder to form. I don't think this is going to be as severe as people are making it out to be. We did say the higher range of 38K would be quite likely, or the 30K. We didn't say, we're not expecting sub 30K or anything of the sort. Interestingly, yesterday we looked at the CME gap and this hadn't closed, and we said this could be a good place to find support. It hasn't acted as that yet. You know, you can see we did a similar thing back here with this CME gap. We closed it, wicked into it, and then bounced. There's a lot of macro uncertainty. So not only did you have the ETF approval, which is a buy the sell, buy the rumor, sell the news kind of event. Lots of it would have been priced in, and people expect instant gratitude once it actually takes place. Doesn't work like that, guys. Markets. The reason being a technical analyzer will help you outperform people that just follow news flows is because you'll see the footprints in the sand. You'll see people accumulate. Why are people accumulating? Okay, well, is there a narrative there? Okay, well, that supports it. This is a simple buy the rumor, sell the news event. I don't think it's going to be as long-lived as people think it is. There's ultimately something greater that's been set in motion now that Bitcoin has been essentially accepted by the institutional world. It's massive. You know, I've been in this industry long enough to know that, you know, that was a pipe dream at one point. And we expect a similar thing for what happened with the S&P back in 1994 when it had its first ETF in the United States, and gold in 2004. You know, there's a longer trajectory that's going to be set in place now, and it lines up with everything we're looking at. This is just a short-term blip in what is going to be a broader trend, in our opinion. This is still a broken out uptrending market. There's been no invalidation of structure. It's just a buy the rumor, sell the news event. And of course, altcoins get thrown around very violently as a result of this. And to sort of talk a little bit about altcoins, again, if we look at the total market cap, in our opinion, this is a broken out market. Typically, when you break out, you come back for a retest. That is very much looking likely for the total market cap excluding Bitcoin and the total market cap excluding Bitcoin and Ethereum. Personally, I'll be looking to take advantage of this. If this comes lower, we are going to be looking to load up a little bit more, because this you're still around your stage one base, and ultimately we do think a broader uptrend is now in place. You know, our macro view of things, the bigger term time frame view of things hasn't changed. And when you zoom out like we've just done, it puts a lot of things into perspective. When you look at altcoins, this is just another day in the land of a very volatile space. And again, if you can't handle the heat, crypto investing, unfortunately, isn't for you because it's inherent with this space. Let's move on now. You know, we still have the kind of dark, deep clouds of Grayscale and their dumping, which is perhaps a bit fundamental. Also, all technically signaled. To actually bring this back, the interesting thing, because the stock market's been doing okay, it wasn't just Bitcoin that ran into resistance, or Bitcoin dollar chart that ran into resistance. It was also Bitcoin against the SPY. And we were saying, look, you're going to get a pullback against the SPY. You're also going to get a pullback against the NASDAQ. You're also going to get a pullback against gold. And this is actually more brutal than a lot of what we've seen in the dollar chart. And the dollar, there is a real macro headwind. You've got, and we've shown you the dollar versus other assets. The dollar is still being somewhat resistant to what we think is a broader trend to the downside. And you've got yield spiking. You know, you can see, I mean, just to show you this really quickly, we don't want to get too much into the bond market because it kind of throws people off a little bit when we start talking about all this stuff. But if you look at where crypto sort of started to teeter, it was at the same point that the yield market got a bid. The S&P has just sort of rallied through it. And ultimately, you know, this is just, in our opinion, short-term chop in what is a broader trend. But we'll see how it resolves. Back to what we were originally talking about in regards to the Grayscale stuff. You do still have Grayscale dumping. And a lot of it's coming from a number of different areas. So you've got the arbitrage trades. You've got people not liking the fees that Grayscale offer and moving to other ETFs and selling via that. And you've also got FTX sold about $1 billion of Grayscale's Bitcoin ETFs, explains much of the outflows, obviously with the bankruptcy court. So there's a lot of things going on. You've got macro uncertainty. You've got technical resistance being ran into and now pulling back from. You've got internal things happening with crypto. Buy the rumor, sell the news. You name it, you've got it. Stick to the charts. The charts are ultimately, in my opinion, leading me to believe that there's a broader trend in place, which is an uptrend, and we are going to... This is just a pullback in a broader trend. I don't think there's any reason to panic or worry. On that note, I'm going to love and leave you. As always, if you've enjoyed the content, like us, appreciate it, so as a comment. And on that note, I will see you all in the next one. Thanks for watching, guys. See you in the next.